Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up for the weekend edition of this Friday, the 23rd of November, 2018. Now, in the weekend edition, I first look at one monthly chart, and then I go into all weekly charts. The idea here is to give you a different look at the market from a bit of a longer-term perspective, the weekly charts primarily, and then Monday through Thursday, I am going through the daily charts. For those of you that subscribe to my research, not just this free version that I do on the YouTube, you know, every morning we do a full review for you. You have to have a user ID and password as a subscriber to see it, with ideas on buying, selling, really a lot more depth than we do here. But it's okay. What are we dealing with? We're dealing with fear right now in oil prices that the Saudis, even though there's a December 6th, I think it is, OPEC meeting coming up, may not call for that big reduction of 1.4 million barrels of cutback. Why? Because they've been asked not to do that by President Trump, who just backed Crown Prince, right? Difficult game. You're down $4 today as the market's digesting that. The cold weather snap did not do anything this past 2 days to lift the nat gas. Nat gas acts like a market that's interesting up here, maybe a blow off to the upside unless it gets another round of weather. The dollar's been the strength all week, and it has been hurting these markets, as have fear about what's going to happen at the end of the month at the G20 meeting. Are we going to see the presidents of China and the U.S. make a move to end the standoff of a trade war? Is it going to be more lip service? We'll find out. When you look at a monthly area chart of closes, the reason I'm showing this is the first time you're under this 18-month moving average of closes now. And I'm talking on a closing basis since 2016. That says a lot. The market has lost its upside punch. That simple. When we take a look at this chart on a weekly basis, and this is the S&P, you've gone from this recent high, closed back under the close of 2017, which was 2676, so the market's in the red. When we look at Fibonacci numbers, I'm going to go from this break low of February all the way up here to this rally high that we had in October to the October break low. I mean, it was just like that. Wow. Now the question is, does the market take out that low, and what does it do? This was a 38%, 50%, and that's a 62% retracement from that low to this high. You're in an area where you keep hitting what I call these boxes. If you break away and don't hit that box, I throw this Fibonacci count out the door. When we're looking at the S&Ps now on a swing line basis, and this is a study that I wrote, you've got lower highs, and that's what I look for to see if you're trending, and you've got lower lows. We don't know where this low is yet going to end up. For the week, you settled right at the low. So the trend is down until you take out, at least on this pattern, 28.18. To do that, you'd end up, what, higher on the year as well if you're doing that. I didn't say you'd close there for the year, but you'd be higher on the year. When you look at moving averages, we're under the 18-week moving average, which puts into play the 100-week, which is 25.94. The 200-week is way down here at 23.33. When I look at Bollinger Bands, and they're important right here, I see that the market's back under on a close that band. You'll notice you rarely stay outside of these bands on closing basis in the S&P, on this weekly chart. So the market, in my opinion, is at a zone where value, people are looking to see where's the value going to come in. Right now, the fact that you're under it adds more credence that maybe the 100-week support's going to be there. You only stay out of the bands 5% of the time. So with this move down, got a 4% chance as I see it next week. When you look at the closing price, and I put it here in pink with it all together, I don't want to confuse you with the line colors. You're under the Bollinger Band. The trend is down. Momentum is measured by the slow stochastic, still pointing down. And I use the weekly slow stochastics very different than I do on the daily charts. You want to learn how I use them? Take my charting course. Go to our website. Very inexpensive. You get a massive amount for it. And I really teach how to use this particular study. When we come to the NASDAQ, 6408.75 was the close at the end of December 29, 2017. You're coming in on that right now, and the 100-week average. Now, if we take a look, you can see you closed under the Bollinger Band. You did not that week right there. So you're back under, and again, like the S&P, you generally don't stay out of these bands. You stay 95% of the time within them. But what this market has done is this market had a sideways band, started bending it, as you can see, would get back, close over it, but the band wasn't turning up on you. Now the band is continuing to move itself down, and you've broken out of that pattern. You're no longer in a sideways pattern. It's a big, powerful break in this market. When we come to the Dow, you're under the close of the year, so you're in the red again, just like all the other indices. Momentum down. Unlike the others, you have a higher high, lower low pattern, and there's nothing here that can turn that down. Now, if you take a look at the end of the day, 24,260, you are underneath the lower Bollinger Band. So like so many of the others, I don't know how long it's going to stay under there, but it's generally not a long period of time. In the Russell, you did not close under that band. So in the Russell, we also have this pattern of lower highs, lower lows. It's pushed out on this. And here too, you can see that sideways action that had been there. And then how the market started pushing and then getting back up. You did bounce off of the neutral number of last year's close, and now you caved in under it, and you'll see how you're finishing up right now. You're still under it. So all the stock indices are in the red. In the VIX, you have the lower high, lower low pattern countered by upside bias. Since you're over the red line, the 18-week average of closes and momentum is trying to point upward. In the 10-year notes, you would have thought with the Fed raising rates, we're talking that in December the probability of another rate hike is very, very high. You would think that you're getting lower rates. World forces have not allowed that to happen. There's big concerns about other countries being able to raise their interest rates. The U.S. is left out there alone, and around us, world economies are weakening, not strengthening. That puts into question just how far the Fed will in fact go. Right now, there's still a dot plot for what we knew as 3 rate hikes next year with the one this year. We'll see if the Fed changes that at the December meeting. But I think you count on the fact that the Fed's still going ahead with their rate hike. You've got higher lows, higher highs. You're over the 18-week average, and momentum's pointing up. Contra to them telling you they're raising rates, the real trend right here is still to the upside. In TLT, you don't have that. Now, this popular ETF has a pattern of a lower low and a higher high. No trend. Momentum is just turning up. If it can continue up, I'd look for pretty strong resistance at that 18-week average of closes. Often, if you'll look at this market, it gets to that number to figure out its next move, and I would not see that changing. In the dollar index, momentum is still up. The bias is up as you're over the 18-week average, and you have the swing line up. Higher lows, higher highs. What the market is paying attention to is the resistance provided by the dollar index's Bollinger Band. See it right there? And I would look for that to continue in this pattern. But you can see a lot of sideways action, and this trend still to the upside. When we look at the eurocurrency, lower highs, lower lows, bearish. Resistance back at the 18-week and the 100-week average of closes with support at the lower Bollinger Band, and momentum is still down. In the British pound, the trend is down. Lower highs, lower lows. Definition of a downtrend. Bias down since you're under the 18-week average, and momentum down. Resistance, 2 different levels, 129.83 all the way up to 131.55 with support against the lower Bollinger Band at 127.15. Canadian dollar, trend down, but you've stepped out of the Bollinger Band. Now, you've done that before. You don't stay out of it long, but it means what? It means there's bearishness. If this market wants to take this sideways action and press this market, this then becomes your trade top, and you can take this band and push even lower. And right now, that's what this chart is saying. It's saying a decision has to be made right here, right now. If you look at the close, we're at 75.68, just above that lower Bollinger Band of 75.48. If you can't get away from here, what starts happening, you lean on that band and you gradually push it down. How much lower, I can't tell you, but that's what it often does. In the Japanese yen, the trend is down. Lower highs, lower lows. I would think the bears want to defend their short position at 89.47. That's the number. You wouldn't want to see prices over 90.90005. Why wouldn't you want to? Because it would break the pattern of lower lows into one of a lower low and a higher high. Right now, that's not what you've got. So on the longer term basis, the bears are still controlling it. This is a breakout of a sideways action over a long period of time to the downside. This could have muscle to it if the bears want to jump on this market. So you've got to keep your eye on it. Yes, you are under the lower Bollinger Band, but if you take a look, last week you closed at 54.50, which was under the lower band, so now you're pushing on that band. And what that means is it's catapulting over the side. Momentum is still down as well. In Brent versus WTI crude, need I tell you that the pressure's on the Saudis to figure out, do they help President Trump by not overproducing oil, keeping it low? Do they go their way to save their budget? What do they do? What does Russia do? So the Brent has been coming in on WTI crude. We keep producing, and as you can see, prices keep coming down. 86.72 was the Brent price back here in October. You are $58 plus, $58.75 now. It's a monster break any way you want to cut it. And that size break is one of, what, half the price almost of the oil came out of it. That's quite a bit. And, you know, and I'm talking from there down here is, what, $28? That's quite a bit of a drop in the market. You are under the Bollinger Band and the 100-week average. It's a free fall. No way to tell you, I wish I could, where's the low going to come in? I've heard many people talking that when the market was sitting here just recently at 65, that the market's next $10, the odds were you wouldn't be down 10, you'd be up 10. Well, that isn't working either, but our work just says it's a free fall. When I come to WTI, free fall. You've gone from 76.90 to the close today of 50.39. Come on, this is just let go. The sideways action became what, my friends? That became a trade top, and it provided all that sideways action. You're like in a pipe, and eventually you burst out of it, and it burst out to the downside. Rebob gas. You haven't seen the cheap gas in your neighborhood yet. I know you think you have. You haven't. I was telling you back here when my brokers were saying they're filling up their cars, and I think I was very clear. I said, why? You know, until it's over, it's not over, and you're still taken down. We're talking wholesale price if you look at just the rebob, not transportation and all that stuff. $1.38. You were just here at $2.15. You do understand what I'm getting at. Nat gas. What about this blow-off? Are you going to go through that, or are you going to pull back into the Bollinger Bands? The odds favor you're going to pull back into the Bollinger Bands. Momentum on the upside is now beginning to turn down. We'll see where the market goes from there, but that's what the odds do favor at this point in time. I want to remind you about our research, and we write quite a bit. You know, I'm sitting here talking to you about the financial markets. We cover the currencies, the interest rates, obviously the energies in great detail, but we don't do it in just writing. If you have one of our trading platforms, you can listen to us during the day as our broadcasters come on. Many of you have heard the Hightower Report. Well, David Hightower's one of the people that works with our platform and puts all this information in it for you as well. We cover the markets orally, with reports, options, futures, trade strategies, commercial trade ideas, all there. We want you to see what our clientele sees. So just give us a call.
You can also go to our website to sign up for this, and you can, of course, click up here if you're watching me on YouTube. It'll take you to our carousel of free offers on our website. Sign up and away you go. I'm Ira Epstein. Have a great weekend. I will see everybody come Monday.